Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Wednesday, May the 4th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we come together and take a look at the market in these pre-market sessions to set up our trade plan. We take a look at the market macro to micro, take a look at the structure of the market, and then drill down to our trade levels, our targets, and our hypotheses for the day. This is a subscription room, so if you're interested in checking us out, I'll put up my contact information in just 1 minute. Please, before I do, read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating with a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, my contact information, quantumleapfutures@gmail.com, or send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Of course, if you go on YouTube and do a search for Quantum Leap Futures, there's over 300 days of these pre-market sessions. And if you like what we do, please follow me on Twitter at Crazy2. This isn't a commercial venture. There's no website. There's no blog. We do this live every day, and then we do live trading and market analysis during the course of the day. So yesterday, our hypothesis was to get stuck in the wicks. If I take a look at the big picture, our main hypothesis was to, move into the prior day, fail, and then come back down and get stuck in the wicks and have a choppy day inside the bottom wick from Friday. And I was thinking we were going to get a push up a little bit higher, take out the 65 VPOC, maybe even the 69, and then fail from there. Well, they only got as high as 63.25. Actually, they didn't even get as high as 63.25 before they failed. Let's bring that trade level up. They got up into that 61.50 right at the composite VPOC and failed from there, and then just rotated down, came all the way down to that 48.50 area we were looking at, and then they found buyers. I tried to get long here too, and I didn't get filled, but we did get the rotation back up, rotated, and then got the continuation wave, and they took it right back up into the prior day, failed at the 63.50 target we were looking at, and then came back down and chopped into the close. So basically, hypothesis number one pretty much played out with a choppy day and getting stuck in the lower wicks. Take a look at the news. We had non-farm payroll this morning, non-farm unemployment change. Expected 205, came out 156. Trade balance came out at minus 3.4 billion for Canada. Preliminary non-farm productivity quarter over quarter -1, expected -0.3. Prelim unit labor costs 4.1 versus 2.9, and trade balance expected 45.6, came out at 40.4. So we had some good news. I did take the short on the non-farm from 44.75 and wrote it down to the 42.75. New news coming into the market 15 minutes after the open. We've got final services PMI. Then we've got the big news, which will be the ISM non-manufacturing PMI at 10 o'clock with factory orders. And then another big news, crude oil. Japan's got a bank holiday. Basically, this would be the big news for the day. Of course, looks like it's going to be Trump for your Republican candidate. I'm sure that the market's going to react to that. They certainly reacted to it last night. Okay, so each morning I like to start my morning out with a basic candlestick chart on a monthly, and I work my way down. I use a 9 EMA and a 20 SMA. Basically what I'm doing is I'm looking for slope and separation and where the trend is being challenged on the different time frames, so I can get an idea where we are within the different time frame participants. We've had this beautiful several year run up on the monthly. Then late last year, September, August, we violated the trend, and then October, November, they took it back. December, they came down and challenged it again. And then we fell out of that balance in January and February, took it back in March. And so far, up until now, we're back above the 9 and the 20. We're coming down and testing that. Um, you know, remember that the year open is 2037.75. We came down overnight to just one tick in front of that 4050 microcomposite VPOC that we've been expecting a move down to. Came down to 2040.75, then bounced up to 46 something, and now we're trading in the 43. A lot of volume went off in the 42 and 42.50 area overnight, and that's basically where our VPOC is. But the overall trend is intact again, but in looking for continuation, but it's consolidation and it could fail. Going to the weekly, we've had this weekly, very, very strong parabolic move on the weekly. Last week we challenged the one-time framing, and so far this week we've come down and we've violated the low from last week. The low from last week was 45.75. We took it out overnight. Our low overnight is 40.75. We're sitting right on top of the 9 EMA, so we could bounce from here or we could fail and come down and challenge the trend. There is a naked cross down here on the weekly at 1983.75. This will get taken out, but remember this is on a weekly time frame, so it can be weeks away, but it's something. If we fail, the 2039.50 area, something to look for, and especially once we get below that microcomposite LVN that I'll talk about in a couple minutes at the 2016 area. But the trend itself is intact on the weekly. On the daily, we have rolled over yesterday, and so far in the overnight session, we are below the 9 and the 20. We're in a possible start of a downward trend on the daily. We don't take that back until we get above the 2071.25. My key line in the sand above us today is going to be the 69.75. I'll show you why when we get to the bigger picture. Going down to the intraday, you can see that the intraday, we did have that trend on Monday, Friday and Monday, and it took it back, and then so far we took it back in the Globex of Tuesday, and Tuesday's RTH session, and so far again in the Globex for Wednesday. We are getting continuation, we're getting slope and separation. This is a pretty strong trend on the 4-hour to the downside. Going to the 1 hour, same thing. We had downward trend, tried to take it back, failed, and then we got the continuation. We did create a technical gap, and we're coming up to close that gap. A gap close will take us up into the 2047.50, 2048 range, but the trend overall is down. There is a naked cross up here on the 1 hour at 2070.50, so mark that in your journal. If we get above the 53 and obviously above the 65 area, that could be a target for a late day probe if that happens today. Going to the 30-minute, same thing, strong trend, good slope, good separation, created the technical gap, rotated up, closed the gap, and so far has failed, and we're getting continuation down. And we created a weak low down here overnight at the 40.75. I expect this to get challenged today, probably even prior to the open. We could expand our range for the Globex before the open. We've still got 35 minutes to do it. Going to the 15-minute, same thing. Strong move down, good slope, good separation, creates the technical gap, closes the technical gap, tries to challenge the trend, fails, and now we're getting continuation, and we're below the 9 and the 20. And then last but not least, the 5-minute. 5-minute, we came down, creating this weak low on the 5-minute, rotated back up, tried to start an upward trend. News came out We failed on the news. Now we're getting continuation with slope and separation to the downside. So coming into the marketplace, we are seeing, as we move to the smaller time frame, we are seeing a trend coming into the marketplace to the downside, and a very crucial level down at 37.75, which is our year open. Okay, so let's take a look at the big picture. So putting it into context again, I know you guys probably get tired of hearing this, but without context, structure means nothing. At the end of the year, in the last quarter from October through to December, we were trading in this balance area between 2008 and 86.50 with a double distribution with the key microcomposite LVN here at 2016. At the end of the year, we were trying to hold the 34 level, and in January we opened up with a gap down. We failed to hold that level. This level down here is going to be crucial to us once we break below the 37.75, because they'll likely come down here to see if they can find buyers here, because this is the last area they tried to hold before we gap down on the year open. And then we gapped down, we came down, and we created this strong balance area. And then the last price we accepted before we broke out was the 1913, and then we worked our way up, came up, accepted where we tried to hold value after falling out in around the 1978, and then we started working our way back up, got above the 2008, got above the microcomposite LVN. At that point in time, we were talking about a move up into the 34. We got it. It came up here, accepted price here in around the 2040, and then we moved our way up into the 6150 and the 6350, which is the microcomposite VPOC for the upper Gaussian distribution, and the composite VPOC with the most traded price going all the way back to 2013. And then we did our breakout, and we broke out of this balance, tried to hold value and break above the 86.50. We popped up, put in a new all-time high, and then we tried to hold value at the 93 area, creating that triple distribution on the microcomposite. Failed, and so far we've been working our way down trying to find buyers. They found a little bit of buyers down here at the 61, tried to move back up, failed, and we've come down, and we came down to the last price that we tried to hold, that we accepted, before the breakout of this balance area. And overnight we've come back down again, and we've come down for the third time to the 47.75, couldn't hold, and we moved down back into balance down here into the 40.50 with a low so far of 40.75. So now we're back inside this balance and this value area that goes from 57 down to 32, and we've got the year open at 37.75 and the microcomposite at VPOC at 40.75. I expect this to be tested either prior to the open or on the open. Key levels to watch for: our key line in the sand below us is going to be 32. Our key line above us is going to be, you can use the 57, but I think if we get a move back into the prior day range from yesterday, I think the key level is going to be all the way up here at 69.75. So I'm going to use 57 as a warning line. Above 57, I'm going to be targeting that 61.50 and 63, but 69 is going to be the key line in the sand above us for continuation and a move back up into the microcomposite in the balance we fell out of, which centers around that 2085.75. So let's take a look at the overnight. Overnight we had a pretty decent range, almost a 20-point range. kind of a double distribution with the LVN right here at the midpoint at 20/50/50. I'm actually going to be using the 48 as a trade area for a move into that midpoint, and then really not going to use the 50/50. I'm going to use the 51.25, which is the value area low from yesterday. And then above that, you've got the 53.75 HVN from the upper distribution. It was where the VPOC was earlier on in the evening. That's my first target inside of value and inside of range. And then we've got the 55.50 midpoint in VWAP, and above that the 57. This is going to be our first warning line. We've got the close at 56.75, we've got the VPOC at 57, and we've got the microcomposite value area high of the balance that we just got back into that centers around that 40/50 VPOC at 57. And if we break above that, a move up through for an 80% destination trade up into the value area high. Take our opening swing out from yesterday. And then we've got the composite VPOC at 61.50 with the IB at 61.75. And then the daily upside ATR target off of the low overnight. Our daily 20-day is running at 22.38. So off of the low overnight, let me just verify that, 20.40.75 plus 22.38 takes us up. And that's our daily upside ATR target, which is the former microcomposite VPOC from the last quarter of 2015. It's also the range high and just above the composite VPOC, the most traded price going all the way back to the beginning of 2013. And then above that, we've got 65.50, and then levels to look for. Above that, I'm just going to put the levels in, and then we'll talk about the hypotheses, is 63.50, and then you've got the key line in the sand, which is going to be the 69.75. I think we get back above 69.75. We found our buyers, and we're going to get a continuation move back into the 2100s. Okay, and then above that, you've got the 74.25. Well, you got 74.50. That's a naked close. Front run that. Then the 77.50 range high from Friday, and then you got the scene of the crime, 81.50, and all our targets above there. I don't think we're going to get up there today, so I don't think we have to talk about those levels right now. Levels below us, or below the range from the prior day. Let me just get this. Our overnight high is 60.25. Our overnight low is 40.75. I want to point this out. There's a 96% probability of taking out the overnight high or the overnight low. We're basically 20 points away from the overnight high. If they leave this overnight low and we get back inside of yesterday's range, especially inside of the value, then you got to be targeting that 60.25. My main hypothesis is we take out this 40.75 either in the next 25 minutes or sometime within the development of the initial balance coming into the RTH session. Our daily downside ATR target off of the high overnight is 20.60.25. Voila. No surprise, that's our year open. So we get below the year open and we're below the daily downside ATR target. We could get a continuation trend day, and I'll be targeting the 34. What was it? 34 even. 34 below there. And then 32 becomes our key line in the sand below. And then below 32, we've got the 3150. 31 and a quarter, I should say. 31 and a quarter. I don't know if it's it's very actionable. It's only 3 ticks away. But I'd be targeting the 29, but the next big level below us is going to be this 25. Then 19, we got a little bit of support at the 22.75, and then 19, and then 17, and then our key support, which is going to be that microcomposite LVN at 2016, and then our weekly ATR target is down here at 2011.50. Our weekly ATR is running 65.8875, and our weekly high is 77.50. So if we get below the 16, I'd be targeting the weekly downside ATR target. I don't think we're going to get down there today. So those are the levels. How am I going to trade it? We're going to be opening auction outer range, okay, in an area of balance with a major target below us at 20, 40, 50. So if we don't take out and put in an overnight low, new overnight low in the next 20 minutes, I'm looking for an open auction out of range, a move up possibly into the 45.75, and then finding initiative sellers somewhere between 45.75 and 48 and a quarter, and a push down through 40.50 and down into the 37, chopping around 37, coming down into the 32 and finding responsive buyers somewhere between 32 and 34, and rotating back up into balance in around the 40.50, and I expect to chop around in the 40.50. So the main hypothesis this morning is open auction, outer range, a move up, a test of the 45 to 48 and a quarter, initiative sellers stepping in and rotating us down, taking out the overnight high, testing the year open, chop, move down into the 32 to 34, okay, find some support and rotate back up and continue the chop inside of this, this value area between 32 and 57, centering around the microcomposite value. I don't think we're going to get away from here that quick. My secondary hypothesis is an open auction, outer range, come down, take out the overnight low, come down to the 37.75, find responsive buyers down here, and then rotate up through the 40.50, and then come back into the prior day range and targeting up into the 55 to 57 area, and then chopping inside of value and inside of balance from the prior day, possibly with a late day probe up into the 61 and a quarter. That's hypothesis 2. Hypothesis 3 is we leave the overnight low alone. We get up into the prior day range, chop around in here, get a continuation up into the 57, and chop around inside of the value and the range from the prior day. So those are my 3 main hypotheses. My alternative, fourth hypothesis is we get initiative selling. We get an open drive. They take out the overnight low and they break through the 37.75, and we come down here and we chop in around the 29 and 30 level and possibly get a late day probe down into the 25 and get a continuation day down into towards this 19 and 24 and 27 level. So those are my my three main hypotheses and my alternative hypothesis. And let's take a quick look at the Renko. Right now we're below the Keltner center line, and move down to the lower line takes us down into the 38 and a quarter, more likely testing that year open at 37.75. If we get back above the Keltner center line, a move up to test the upper Keltner will take us up into testing the range low from yesterday at 48, and a move possibly up into the value area low from yesterday at 51 and a quarter. We didn't put the overnight VPOC. The overnight VPOC is around 42.50. It's going to be a choppy open. This could be a tough day a tough day to trade. 42.50. Okay, so that's our levels, and that's our main hypotheses. Let's just take a quick look at gold. Gold, failed to get back and hold above the 1300 overnight. It's come down to the low at 1277.30. It held the key level down here at 1275.70. Current balance is above us at 96, and right now we're trying to find balance overnight at the 1288 level. If we can hold this 86, look for them to move up into the 88 and possibly test the microcomposite LVN here at 90. Above 90, I'd be looking for a move back up into the 94, 96 level. If we can't hold this 86, look for them to come down into the 83, but I would really be expecting them to come back down to the 1275. And if we don't hold the 1275, we could possibly start working our way down back towards that composite VPOC down in the 1235.30 level. That balance that we just broke out of in the most traded price going all the way back to October of 2008. So that's what we're looking at gold. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.